Hello and welcome to Fun to Money. Here we are back again. We will be discussing pre-existing conditions once again, and the reason why we are doing so is because we are getting lots of questions, and we thought we'll answer them. Pre-existing disease or pre-existing conditions or pre-existing illnesses or pre-existing ailments. You can call them whatever you want. Basically, what happens is these are the health conditions, which actually prevent you from getting the claim settlement, the coverage for health insurance for a certain period of time. After the period of time gets over, it could be 2, 3, 4 years, you get covered. Now, what is the problem which people are facing? They want to know whether if they have a pre-existing condition, illness, or ailment, or pre-existing disease, whatever you would like to call, will they be covered or not? Now, we will be taking up 5 questions that have come up, and on all of them, the theme, the central fact that everybody needs to understand is basically this: when you are about to buy a health insurance policy, you need to disclose your pre-existing conditions or pre-existing illness or disease. You need to do that. It then goes to a medical underwriter, if that can be a term that can be used. A person is understanding the health risk of the individual who's applying for the health insurance policy, and after understanding the facts of the case, the person will tell the company how to respond. So basically, the company would get back to an individual and say they'll say that okay, we're going to cover it. In this case, we will cover it, but for a period of 2, 3, or 4 years, depending on the policy, the product, the coverage may not be there. After that, it might be covered. There could be a condition where the premiums can be increased compared to another person of the same age and profile because of the health condition, and also there could be a case, an unfavorable case where the company can say that we are not going to give you the cover. So this is the process. Now, the key part of being covered for pre-existing condition is disclosure at this point, right? If you have disclosed, then you get covered. If there has been a problem, you haven't disclosed, that's when the problems start, and that is one of the reasons why claims get rejected, because the disclosure hasn't happened. And remember, not only the disclosure is important. Why it is important? It's not just that condition. Because of that condition, if there is another illness that comes about and related to it, so if you have blood sugar and there's some kind of heart related issue, then or some other issue which is getting triggered off from diabetes, then it is not just diabetes, but something which is triggered off by diabetes is something that also will not get covered during that period. Now, if you haven't disclosed, then that becomes a very important reason why your claim can get rejected. So we are going to now take up 5 questions on the other side of a break, and which have come from our viewers, and we're going to illustrate to you how this operates in all of those 5 cases and what could be the other alternatives, because in some cases people want some kind of a plan B. So we'll be discussing all that. We'll be coming up with the questions. Don't go away. Welcome to Fun to Money. We are discussing pre-existing condition, pre-existing disease, illness, pre-existing ailments. So there are a whole lot of ways in which you can describe them, but we are talking about basically health insurance, and so people have our viewers have asked us questions. We're going to answer them. We've already told you the central fact, central line which of reasoning which will be operating in all these cases. So let's take up these questions one by one. So let's start off with, I'm going to read them out from a piece of paper and keep giving you the answers, right? So the first question is by Chinmay Bora, and he's asking in Hindi that if you have a pre-existing condition, in an existing illness, will you be covered or not? So Chinmay, as we have mentioned right up front, first thing is that if you have an existing illness, you have to truthfully and accurately mention it in your proposal form. Then the information, when you submitted it, goes to the medical underwriter within the company. When the claim application is being processed, then the medical underwriter will try and understand the risk involved to the company and to you and to the company, and then they will take a decision whether they want to give you a policy. If so, what is the exclusion period, which is the period when you don't get covered, when you don't get protection for those ill. So that's what the catch about pre-existing conditions is. There's a period when you don't get coverage for these illnesses, and whether you should be paying a higher premium, whether you should be getting a plan at all or not, right? So if you have an existing illness, it will get covered, provided pre-existing condition will get covered, provided you have made the disclosure up front. So will the coverage happen? Yes. When does it happen? You should have told the health insurance company or the company providing health insurance up front. So the answer is yes, but with a qualifier, right? So now the important thing is no self-certification works. So if you say that, I had a pre-existing disease long back and I've not been affected by it 10 years, 15 years later, that doesn't work. Even if the world's most famous doctor certifies it, will not work. In a health insurance, this is the only process that will work. So at the time of buying, you need to do this. If you don't do this, then you will be in a spot of bother if you're going to make a claim around that illness, right? So let's get on to the next question, which is Shireen Rose Rodriguez. Now she's saying, in case a pre-existing disease happened many years ago, like 10 years, will it not be covered? So I think we have already answered the question. If it has happened 10 years back, when you're buying the policy, truthfully and accurately disclose it. Let the company decide whether that pre-existing condition is a pre-existing condition. Now, what you think is a pre-existing condition for the company may not also be a pre-existing condition. They might think that it's absolutely it's something that cannot be considered a pre-existing condition. There are lots of conditions when you grow up that they become absolutely okay, normal, and there's nothing, no risk involved from a childhood sort of episode. So if that has been seen by the company, then they will not bother. But the bottom line is you have to disclose it. If you haven't disclosed it and something happens, that disease shows up, or any disease or any condition that can be proved to be triggered by that pre-existing condition, you are definitely in a spot of bother, and that is often the reason why a lot of claims get rejected, because people are not aware that this is the process that has to be followed. If you just follow this process, it shouldn't be a problem, Shireen. That's what we think. And as you said, that when you truthfully disclose it, what happens is the worst case is they can deny. They can say that for a certain period we will not cover it. They might increase the premium, but you get coverage nonetheless. You get coverage for all the other illnesses, right? So it's better than zero coverage. So this is something which shouldn't hold you back from getting health insurance. So let's get on to the next question. Madhusudan R. One of our previous discussions on pre-existing conditions. This seems to be a very important area where a lot of people seem to be having questions as far as our channels are concerned, and we're glad that we are being able to address them. Now, he's saying valuable info, he's liked it. Now, he's asking a question that is pre-existing disease covered irrespective of disclosure after waiting period. Now, Madhusudan, as he said, that if you need to disclose it. If you haven't disclosed it, then you won't get covered. Okay. If the company gets to know that you haven't disclosed it, you can be very sure and the company gets to know that you haven't disclosed it, and that is the reason why you're making the claim, you will not get covered. So we have already explained this, and so in case they reject it, they can always argue that this is what is called a voidable agreement or voidable contract, that this contract is void. It's because whatever you have disclosed is not true, because the argument they are likely to give, and which they give in many cases, and or shall we say in a lot of cases, is this: that had you disclosed it, they could have declined giving you the policy, or they would have charged you higher premiums, they would have had an exclusion period which could have been longer, shorter, whatever. And this is the reason, because you didn't disclose it, therefore you are laying the ground for a rejection of claim. So coverage will happen. You're asking that whether you have asked irrespective of disclosure, you need to do a disclosure. So then you don't have a choice in this case. It so happens, right? Let's get on to the next question, which is Rohan Money. Now, one of the leading companies has rejected Rohan's application proposal and says because of pre-existing conditions. What can we do about it? Rohan, you can always go to another company and subsequently to another company and keep trying out other companies. There are a couple of other suggestions we can give. These are kind of slightly out of the box suggestions. One is, if you are working somewhere, try to go for see whether there's a group health insurance cover being provided by your employer, because that's going to be really useful. You get covered along with your colleagues, and if you have to pay any kind of premium, that's going to be really less. Most of the times employers do it. If they are not doing it, employers, you can encourage your employers to do it. You can get your colleagues to get together and ask the employer, or you can get your colleagues to get together and go to the company and say that, okay, we are a group, we work here, and we want a group cover, and you pay the premium. When you are in a group, 30, 40, 50 people, then the company will start looking at the whole policy, group policy, with the group of people in a very different way, because there are other people who will be much healthier than you. I mean, they wouldn't be having pre-existing conditions, and that makes it a much more attractive case for the insurance company. That's one. You could even do this in your locality, say you stay in a housing society or a complex or like that, or a locality. You can do that, get along with like-minded people who try to go for a group policy. Within your family, you can go for it. Immediate family, try to look for a family floater, which covers family members, and there's a common insurance coverage, so that is to be divided amongst all your family members on a pro rata basis. You can check out the family floater discussion. We're giving links in the description section and cards, so you can check it out. So you can go for a floater, you can go for a group plan. If you're facing problems, eventually they should get sorted out. Last but not the least, you can go for an emergency fund. In any case, you must have an emergency fund under any circumstances, which is basically a couple of months of home expenses, and we are giving links in the description section and also in the card, so you can check out. So these are the various fallback plans for you, which you can rely on if you are facing problems with health insurance proposals. Your health insurance proposal is getting approved by companies, but beyond a certain point, it should not be that much of a problem. But if you are having these problems, you can try out these out of the box suggestions. Hopefully they should work out right. Now let's get on to the next question. Anjan Jain is saying, sir, if there is a disease in childhood, then it is pre-existing disease. Current age is 29. Now, as we said, what is pre-existing or not, let disclose it in the proposal form, let it go to the insurance company, let them decide. Because if you are certifying it or somebody else is certifying, you're not disclosing it, and you generally think that you can certify it, that's not how it's going to work. That's where the claims get rejected. So you truthfully give the information, let them evaluate whether it's pre-existing condition. For all you know, a pre-existing disease They may say that it's not a pre-existing disease, or they may say yes, it is. What is the worst case scenario that will happen? You won't be given a plan. It's better than paying premiums and not getting the claim settled, and it's also better than not having any coverage with the fear that your claim is not going to get settled, right? So if particular aspect is not getting covered, then you can at least be covered for other aspects. So there's no point in saying that we think just because of a pre-existing condition, I'm not going to buy a health insurance plan. A lot of people think like that. That is unfortunately not the right way to look at it. Remember, when the claims are getting settled, companies really dig deep. So if you had an episode in fifth standard, you can damn sure that the companies would, if records are existing, they would go all the way there and try to find out whether something like that has happened. They really dig deep. They really do a lot of spade work, research about your medical history before the claim is settled. So this is a smarter way of doing it. And remember, as we mentioned, if the pre-existing condition can trigger off other diseases and you haven't disclosed it, that's another reason for getting your claim rejected, right? So let's come to the last question, which is by a viewer, Mission Das, and he's saying that he's of 50 years of age and he's got pre-existing disease in the form of diabetes and kidney transplant. Who can provide me health insurance? You will actually have to give the proposal form and try it out and check out which company will do it. You can obviously ask agents out there, brokers. They are there. They should be able to guide you. I mean, it's not so difficult. You can actually take the help of agents and brokers. They're there. Just search online. There could be financial planners or advisors. They are all doing it. So Mission, it shouldn't be that big a problem, right? And accurately disclose the details. Let them decide for themselves whether it's a pre-existing condition or not. In this case, of course, you've got diabetes and kidney transplant. It's obviously going to be considered as a pre-existing condition, but obviously we don't see this becoming a problem. You're getting coverage, and of course you can try out some of the other things that we mentioned, like having an emergency fund, which any case people do it, but you have to do it in a smarter way. We have provided links and we've done the discussion there. Do check it out and you'll find it useful, and of course some of the other things that we've suggested. So we hope you found this useful. If you've liked it, hit the like button, share it with others, and get connected with us on all leading social media networks. Till the next time, take very good care of yourself, and goodbye.